But you probably suspect that, given that we've got the central banks coming out and looking to add liquidity into the market, we had the Bank of England as well coming out and saying the British banking system is safe. This kind of sounds like don't believe it until it's officially denied. There is concern out there, and they're acting because there is concern out there, and this is going to have longer term implications. This is probably going to continue to fuel the bull market and gold for the time being.
Yeah, I mean, like it's a really fascinating time. We've been speaking about this for years. You in particular, Dave, have really underscored this point with many guests. The world is heavily indebted, and increasingly so since the global financial crisis. Debt to GDP ratios, which is a fair way of measuring the total burden of debt, has increased dramatically. Even in markets such as China, the United States, obviously, they have been printing money and debasing currencies on a competitive basis. So in order to maintain some sort of economic stability, they debase their currencies relative to each other. They also issue an awful lot of debt. And what you're seeing now is the politicians have gotten their hands on this magic money printing machine. And we saw that through the COVID crisis, where they were able to mobilize direct payments into people's bank accounts. They call that helicopter money, if you wish. And almost magic up a financial reality which was totally made up. And now with interest rates rising, and they're not raising interest rates because they want to, they're doing it because they have to. They have no choice. I mean, you hear the Fed chairman and the ECB saying, well, we've decided to raise rates by 25 basis points or 0.5% or whatever it is, and it's their choice. It's not their choice. Inflation is eroding the earning power of the average citizen, and they fear that those people will stop buying, stop participating in the economy, stop going on holiday, buying cars and doing what they need to do. And they're worried that this will feed off itself. So they need to dampen inflation before it takes hold. I would argue it already has taken hold, and it will be here for a long time. And it comes in waves typically. And I think it's too late that with the interest rate rises, I'm not sure they'll be able to control for it anyway, but they're being forced into this. And as a result, the debt burden, because interest rates are higher, has now increased dramatically. And now we're seeing which financial institutions have interest rate risk relative to each other. And those are now being found out. And now the investment market is on a hunt to find the next, SVB Bank or Credit Suisse. And I think this will continue to burn for time to come. And, you have to question the regulator's ability to dampen this fire. I don't know how they will, because they also have to keep an eye on inflation, which is the bigger threat. And will they let financial institutions fail? Will they let depositors be burned? What are they going to do with bondholders? As you say, these questions are all being asked in the Credit Suisse situation, which is unfolding right now today and over the weekend, and I think into next week. And we're all watching it eagerly to see what happens. But ultimately, what's happening is people are now going to quality, and traditionally, quality would be like low risk currencies such as the dollar or the yen. But now gold has actually been seen as one of the most high quality forms of money ever. And since 2020, the annualized return on gold across most currencies is around 9% per annum, which is incredible when you think about it, that a piece of metal can actually have that kind of annualized return. So it does provide a degree of safety not seen in other currencies. And that's why people are moving, or at least allocating a part of their deposits to gold and silver to a lesser extent. But we're seeing huge demand right now for gold as a safe haven asset. We're seeing it from companies, from private investors, from pensions. We even had a charity on the phone today who was looking to allocate a portion of their reserves to gold. And you can understand why, given the questions that are being asked.